Hey everybody, welcome to my channel. So today I will be talking about the Zomato IPO. So recently, as you might be aware, they released their DRHP, sorry. So DRHP contains all the details that is to there about the company, their financials, management, everything. But it is a very lengthy document. And it will be very boring if we go over to the whole of it. So I've tried to take all the important points out of this document and share with you. So if we want to go to the complete document, you can just Google. So you Google and you type in Zomato DRHP. The first link that you get is the Zomato DRHP. If you just open this link, you will be able to download this document, which is their draft red herring perspective of Zomato. It contains an overview and in detail description of a lot of things about the company, financials, management, risks, etc. So, but we will go over this, but only a small portion which I find is important. Meanwhile, let me take you to what I found is the most important parts. So this is a small presentation that I've prepared of 6 slides. Let's go over this, and I hope you find this informative about Zomato. So Zomato is launching its IPO. I think it will be launched by May end, maximum by first week of June. So it's an IPO of almost $1.1 billion. So that's a huge round of IPO, and going by the size, I can expect a lot of people to actually get allotment of shares in this IPO. Why? Because 8,000 crore is quite a lot amount, and uh, the face value of shares is rupees 1. So a lot of shares is going to be on offer. So I think the chances of you getting the Zomato shares is quite high. So apart from that, so the details. Let's go. The details. A fresh issue of equity shares worth 7,500 crore and an offer for sale of 750 crore by its largest stakeholder InfoEdge. So they will be adding new equity shares worth 7,500 crore to the company existing shares, and one of their promoters, InfoEdge, I think they also have InfoEdge is also the promoter of Jeevansathi.com, 99acres.com. It's a company listed in the stock market, and it will be exciting to see if the shares of InfoEdge gain because of the Zomato IPO. So Zomato has raised so far around 12,000 crore over the course of its 13-year existence. That is from 2008 up to 2021. Zomato has almost raised close to $2 billion in the last 13 years. So in the last fundraising round, Zomato was valued at 4.5 billion. So this 4.5 billion dollars, along with the almost 1.1 billion dollars that is going to raise in this IPO round, the valuation for Zomato might go up to 6.4 billion. That is if they price it conservatively. I'm expecting Zomato will price this IPO at quite a premium because of the brand value. People these days are investing just looking at the brand. They don't look at the financials, they don't look at the future growth, or they don't go by the concept of value investing. They just find a good company, a dot com company, an online business, and they invest in it heavily. You might look at Burger King, what happened to it after the IPO. The price almost doubled on the listing day. Let's go to the next slide. Okay, so this is going to be an interesting slide. I will go in detail about this slide. So the numbers. So what do the numbers for Zomato look like? So for FY18, the revenues were around 500 crores. The expenses were 594 crore. So the loss came in at around 100 crores. I'm sorry. Yeah. FY19, the revenues rose to 1300 crores, the expenses rose to 3600 crores, and the loss was around 1000 crore. In FY20, this is the pre-pandemic year, that is that is 2019 to 2020. The revenues were 2,600 crores, expenses were 5,000 crores, and the loss came in at 2,300 crores. So till the year 2020, they were burning through cash very fast at a very rapid rate. And coming to the current year, that is 2020 to 2021, the last 9 months, that is till October, the company had a revenue of 1,300 crore, which is half of what they had the previous year. The total expenses was 1,700 crore. So here I feel here I believe that they were able to reduce the expenses a lot, which is quite a credible thing. And the loss was just 682 crores. So this is also quite a big positive because the revenue had halved, the expenses up has come down to almost one third, and the loss has also come down to almost one third. So this is a big positive for the company that they have been able to cut down their cost and reduce their losses. I hope they can be profitable going in the future. It's a pipe dream, but if they are able to do that, the company might be able to justify its valuation of $5-6 billion. So coming to the metrics, the average monthly transacting users. So in FY18, around zero point 0.9 million people were transacting on this app. That is 9 lakh users were using this app on a monthly basis. This rose to 56 lakhs, that is 5.6 million in FY19. It rose to 1 crore in FY20. That is 1 crore people were using this app monthly in FY20. That is 2019 to 2020. This value has again fallen to 58 lakh users every month for the 9 months ending October in 2021. So this is the average orders. So this app got orders. So this app got 30.6 million orders in FY18. That is 30.6 lakh orders were placed on this app in FY18. This rose to 191 million. 19.1 crore orders placed on Zomato app in FY19. 40 crore orders placed on this app in FY20. And for the 9 months ending October in FY 2020, that is October 2020, around 15 crore orders were placed on the Zomato app. So the gross order value, this is the addition of all the value of all the orders placed. So 1,300 crores for FY18, 5,300 crore for FY19, then almost 10,000 crore for FY20, 6,100 crore for FY 2021. Moving to the average order value. So this is a very interesting chart. This is the cost of average order placed on Zomato. That is when you place an order for say a pizza. So what is the average cost of all orders placed on the app? So this comparison is for the year 2020 and 2021. So if you see Q1 2020, the average order value was 264 rupees on the app, and in the average order value in the last quarter, that is from September to October, from August to October in FY 2020 has been 407 rupees. So it has almost doubled, not almost doubled, but it has risen quite significantly. So I believe when the order value increases, the margin for Zomato also increases. You will see this in the next slide. So some more key metrics about the apps. Zomato's gross order value in December quarter was 2,981 crore, surpassing numbers seen before the pandemic. So they mean to say that the last quarter, the December quarter of 2020 year was very good for them. It was the best for them so far. So dining out business is yet to recover. Okay, so that is understandable. At the end of December quarter, Zomato had over 1.6 lakh delivery partners with 3.5 lakh active restaurant listings. So 1.6 lakh delivery partners are the guys on motorbikes who deliver your orders, and they had 3.5 lakh active restaurants selling via their platform. Of the listed entities, 1.3 lakh were active food delivery restaurants during the month of December. Okay. The company has 14 lakh subscribers for its Zomato Pro, earlier called as Zomato Gold service. So this is also a very important figure for them. It is something like Amazon Prime. They get recurring revenue out of these customers. That every year they will pay 1,000 or 2,000 rupees, which adds significantly to their revenue each year. So I hope this increases going forward. Nearly 1.1 crore customers ordered food every month in the previous fiscal, that is 2019-2020, with average monthly frequency of 3 times. So again, a very interesting statistic. Okay, so this is also a very important chart. So this shows how much money they were losing per order. So for an order, their commission and other charges were 43 rupees. Their customer delivery charge was 15 rupees. The actual delivery cost was 52 rupees. So they were charging the customer just 15 rupees something for this, for their delivery of their food, and the commission and other charges are 43, and they were losing around 52 rupees for the delivery cost. For discounts that they offered, they were losing 21 rupees, and other variable cost 15 rupees. And so they lost around 30 rupees on average on every order placed on Zomato app. So this was in FY 2020. So for the last 9 months, their commission has increased to 62 rupees from 43 rupees. The customer delivery charge has increased to 26.8 rupees from 15 rupees. And the actual delivery cost has come down to 44 rupees. So they are making a slight profit here. That is, they are getting more commission and more delivery charge from the user, and the actual delivery cost is less, 44 rupees. They have reduced the discounts to just 7.3% of their charge total. So earlier the discounts were around 21% of their cost. Now it's just 7.3% rupees. Okay, and the other variable cost has also slightly reduced to 14.8 rupees. So now they're making a profit of 22.9 rupees on every order placed on Zomato. So earlier they were losing 30 rupees on every order in the year 2019-2020. In the year 2020-2021, they are making a small profit of 22.9 rupees on every order placed on Zomato. So this is also a very interesting statistic. So this graph is the investment timeline made into the company and the deal size in millions. So as you can see, way back in 2010, the investment started with InfoEdge buying 1 million, 2.92 million, 2.33 million. Then InfoEdge and Sequoia Capital investing again. InfoEdge, Sequoia Capital. Alibaba Group coming in April 2019 with a huge investment of $200 million. Alibaba Group again in March 2019 with $305 million. Tamsek Holdings, Alibaba Group, Pacific Horizon Trust, Tiger Global as soon as FY21 with 250 million. So yeah, this is just a small timeline of all the investments made into Zomato in the last 10 years. So the shareholding, who holds what percentage of Zomato? So as you can see, currently InfoEdge is the largest holder, but I believe they are diluting their stake in this IPO. They are selling shares worth 750 crores. So after this, I'm not sure what percent their holding will be because they haven't disclosed that. Depends on the IPO price. But they will be offloading around 750 crore, and they will still hold a minority stake in this company after selling those shares. So Info Edge Group shares, again, as I said, might gain from the Zomato IPO. So after Info Edge, Alibaba Group is the second largest holder, and then we have Uber Eats. So I think in 2020 Zomato acquired Uber Eats for $200 million something, and that gave them a 9% stake in Zomato. So they will also be a significant stakeholder after the Alibaba Group. Other investors are Sequoia, Tamsek, Tiger Global Management. Then we have Deepinder Goyal, who I think was the founder of the company. He holds around 5% group, and the rest of the investments. So coming to our last slide, how does the company plan to use the money from its IPO? The company said it would use 75% of the gross proceeds from its IPO, that is rupees 5,600 crore, to fund organic and inorganic growth initiatives for 5 years. So inorganic growth is mainly acquisitions, looking to buy other food delivery apps or maybe restaurants. Its organic initiatives include customer and user acquisition. So this might be giving more discounts to bring in new users into the app, investing in its delivery infrastructure, that is adding more partners, that is people delivery agents who sell on the app, and building its technology infrastructure, that is keeping the app up to date and making the app fluid. So among its inorganic initiatives, Zomato said it would continue to seek out and evaluate opportunities for acquisitions and strategic initiatives. So that is, it might. So I think apart from Zomato, they have only Swiggy as competition currently. But if they have an opportunity, they might look at acquisitions, maybe a restaurant chain or something. So that's it from the PPT, but let's just take a quick look at the actual DRHP that was filed by Zomato. So this is the document that was filed by Zomato to SEBI for its IPO. It has a huge amount of information and it will take you a lot of time, but I will go through 1 or 2 pages which I found was very important. So let's go. The first page was the finance page. So this is their financial statement in brief, their revenue from operations, their expenses. So as you see that the revenue for the last 9 months has declined as compared to FY 2020, but they said that it's due to the pandemic, and the last 3 months, that is October, November, December, was their best ever for the app. So that means that the business has recovered or started to recover significantly. Another item is so these are the losses, that is around 600 crore of loss for the 9 months and ending September, the 2000 crore loss in 2020, the 1000 crore 1.1000 crore something loss in 2019, yeah, and a 100 crore loss prior to that. Yeah, so one more interesting thing is the company has very little to no debt. That is the liability section. It's quite good that so one of the reasons I feel this stock will do well is because it has little to no debt. Although it has had losses, that has been from the investments it has raised from the various investors, the cash burn. So it has taken on very little debt and kept the balance sheet debt free, almost debt free. So that's a very big positive for this company. So the liability sections, you can see that the debt is close, and the debt is close to nothing. That's a big positive for the company. There was one other metric, that is the cash on balance sheet, that I wanted to show you. Yeah, so this is the thing. Yeah, so current assets, so as you see, it has investments worth around 4,000 crore. So this is basically cash which it has kept in liquid funds to fund its operation. So it still has around 4,000 crore worth of liquid cash on its balance sheet, which it can use for its future purpose, and it's again raising around 8,000 crore worth of cash from the market in the IPO. So it will have reserves of around 12,000 crore going forward, almost $2 billion. So cash and cash equivalents is quite good. So yeah, so the liability section, as I was saying, it has little to no debt. It can easily pay off all its remaining debt. So this is going to be a big positive going forward for the company, that it has an asset light balance sheet, and it has also reduced its cash burn rate in the last 9 months. Earlier it was burning around 2000 crore worth of cash every year, and that came down to 600 crore, and it currently has around 12,000 crore on its balance sheet. So at least for the next 4 to 5 years, I feel this company will have no problem in tiding the waves going forward. Yeah, I think the company will do well in the IPO. So this was one thing. So next thing is, we'll take a look at some risks that they have mentioned. So page number 39. Yeah, so risk. So the company has mentioned in its risk that we may not be able to sustain our historical growth rates, and our historical performance may not be indicative of our future growth. So company is saying this, that they have had extremely good growth, but they might not be able to sustain this going forward. So almost all aspects of a business, in particularly food delivery, has experienced rapid growth in recent years. So it's just a risk factor that they have mentioned, that they have been doing extremely well in terms of growth rates, but it may or may not be sustainable going forward. So the company is warning you. So point number 2, the company mentions, we have a history of net losses and we anticipate increased expenses in the future. So company is saying that going forward, their mindset is not to become profitable as soon as possible. They have clearly mentioned this. They are after growth and expansion of their business. So we have incurred restated loss for a period of 1000 crore, 10,000 crore, rupees 10,000 million, that is 100 crore, 1000 crore, and 2000 crore, and 682 crore in the 9 months in the periods previous. We expect our cost to increase over time and our losses will continue. This is very important. Companies saying that they are not in the mindset of making profits going forward. Our losses will continue given significant investments expected towards growing our business. So they will be chasing growth and not profitability in the near future. And I believe it's kind of justified given the amount of cash they have in their balance sheets. So 4,000 crore plus 8,000 crore from the IPO, almost 12,000 crore. But I believe they should have had a mix of both, that is chasing profitability as well as growth, not just focusing on one thing. That can be dangerous in the long run. Yeah. So this was another point that I wanted to make. So apart from this, the final thing in this video, let's take a look at the people who are going to be billionaires going forward. So these are the people who are holding significant positions in Zomato, and these are the people who are going to become millionaires and billionaires soon when the Zomato IPO is listed on the stock markets. So Kaushik Datta, the chairman; Dipinder Goyal, the founder; Sanjeev Bikhchandani, who is selling 10% of his stake via InfoEdge in the IPO, the founder of InfoEdge India; Gunjan Patidar, the co-founder of the company; so Gaurav Gupta, co-founder and head of supply; Mohit Gupta, again the co-founder. So these people will soon become millionaires and billionaires of India in a month or so. And if the price doubles on the listing day, as it has happened for a lot of tech companies recently, we might have a couple of new billionaires in the gang, so too, after the Flipkart founders. So yeah, that's it from the videos, guys. I hope you had an informative session with my video. And this is one of my new videos. I'm new to YouTube, so I'm sorry if you found anything not sufficient enough. I'll try and improve going forward. Thank you for watching and have a nice day.